It's my pleasure to welcome you this morning at the Kempinski for this blockchain conference. Not only is there a rapidly changing regulatory and compliance landscape that is affecting the business to a very large extent, but you also see the eruption of new technologies, blockchain naturally, but also smart contracts, eventually the Internet of Things as well. And these are expected to have quite a large impact on the way we carry out our business, whether it's on the trading side or on the trade finance side. Thank you for having come out in numbers. It's just proof enough, if we would need any, that this is a topic of real interest to you and to the industry. Now, a lot here hinges on the sector's ability to come up with common standards and approaches and practices. And this is why fundamentally collaborative initiatives that bring together multiple actors, bankers, or eventually traders as well, as partners hold so much promise and potential.
Some of the team members of our Geneva commodity franchise and actually a wider group of our global franchise have been really the key, let's say, contributors to this project. What was the project for us in ING? Last year we had what we called an innovation bootcamp. We were really thinking, so blockchain, very fashionable word, we hear it a lot, but what do we really know about it? As the team continued to develop and study, it became quite evident that this is very easily accessible, it's decentralized, the transactions that you monitor or administer in a blockchain are immutable, and the cost savings potentially are tremendous. So we thought that this could be quite useful and a game changer for trade finance and for the commodity finance. I understand there will be many cynics in this room and in the industry. I mean, there's many ways where you can say what will the challenges be that we face? Lack of standardization, how is the legal framework around this? There's a fear of cannibalization possibly. What does this do to traders? What does this do to the banking industry in terms of its income model? But we believe ultimately these can be overcome. And I think it was said before, it's not as so much as to if it will happen, but when it will happen. So the technology is there, and internally we developed a simple prototype for the sale of copper. Ultimately, the whole process resulted in the team winning our internal innovation bootcamp. So out of 1,058 IDs, this one was the winning ID. So we internally have 3 people full-time now working on this project. But we also very much realized, and that's why we are here today, that we cannot do it alone. And we do not want to push another ING solution to, let's say, the industry. We simply cannot do that. So we need to cooperate with other banks, we need to cooperate with traders, we need to cooperate with everyone who is a partner and supplier in some shape or form in this industry. We have already a number of banks and a number of traders who have indicated that they will make time and resources available. And we really are keen to hear your feedback and to work together with you. Again, I want to make very clear, we're not in for pushing a new ING solution. This will only work if we do it together. Thank you very much, and I hope you enjoy this day.
Blockchain is coming. Bitcoin has been out in the market. Now transactions can be done in near real time. And all of these topics started to come out to, let's say, mainstream media around 2.5 years ago. I myself was very surprised to see this because the technology that had been created to circumvent the financial institutions was now the interest of financial institutions. Why do we rely on a centralized authority to conduct trades, to conduct transactions, and to share information? And how can we do it in such a way that we do not have a centralized node or a centralized entity that regulates this information? Well, I think the point to highlight here is that it's a network play when we say distributed ledgers and blockchain technology. And this is why it's been designed to operate the need for trust. And the trust comes from the agreements and the contracts set up in place between parties. Hence, it had proven itself very useful for smart contracts that can now be transformed on a distributed ledger. Blockchain is actually a form of a database in a way, where each and every participant agrees on what needs to be put on the ledger. Well, I always give the example of the round table, where we have multiple, let's say 10 individuals sitting on a table and deciding, opening up their books, taking their pen, and deciding whatever is being written on that page is to be confirmed and decided by each and every participant in the ecosystem, meaning it again has a very good ground to be used in today's smart contracts. When we use blockchain technology, we know that it is definitely on the way because each and every transaction is communicated immediately, and not only the funds information, but also the settlement and clearing is done in near real time.
The way I like to describe it is like this: as a decentralized global database in which nodes don't trust each other. And that is a useful thing in all kinds of business domains, but it's especially useful in finance, where a whole lot of the work is oriented around paperwork, keeping different institutions in sync with each other on very complex pieces of data, very complex documents which are constantly changing. But we can imagine this kind of database would apply elsewhere. You can imagine that an entire industry agrees to share a single giant, Oracle database which would store the financial system, right? We can imagine that. And the thing is, this would work technically. The computers wouldn't care. All of the problems with doing it that way would be essentially political. And so DLT is a solution to these essentially social problems. This is where the concept of smart contracts come in. The genius of smart contracts is they embed new software into the database transactions themselves.
And when I say distributed ledger, I mean what people thought of as blockchain, but how Mike explained it's different. It's permissioned, shared only with the people you know with whom you transact. So what do we learn so far, 6 months now of experimenting with trade finance and distributed ledger? One, if you automate and digitize transactions to reduce processing costs, times, and resources. And that's what we did with the simulations. The second thing, it'll provide authenticated, and that's where you get into this immutable record keeping, authenticated, and also you'll know who put it in there because you can authenticate the participants. So you have an authenticated end-to-end transaction visibility. It improves auditing, asset transfers. If you want to move assets around the world, you can make that data portable and trustworthy. And it'll also help with compliance, credit, management, analysis, and reporting. And they're promises, right? And some of these have to be combined with existing technology. This isn't just distributed ledger being able to deliver these. Commodity finance is obviously the top of it because that's where you see a lot of high velocity in people's businesses in trade finance. It also moves, it's for the small companies, large companies, global companies. Commodity and trade finance has probably one of the highest attention levels of distributed ledger and trade finance. The other is open account invoice discounting. The letters of credit are in there too, but the biggest market for trade finance in the future is open account business and turning that into a bankable opportunity for banks and alternative lenders. There it is, KYC utilities that could help everybody across the board. Trade credit insurance, accessing it, managing it, monitoring it, knowing if you're covered, knowing if you're not. And marketplaces.
Putting one company in the center of everything where they would then be able to charge monopoly rents. The thing that could really be revolutionary of using blockchains in this space is, yes, partly the technology is very nice and so on, but the fact that it is the first time that these things are being structured in a somewhat decentralized way where it's deliberately set up such that one company can't get itself into an abusive position. Well, that's the goal at least. That is potentially revolutionary.
Not all of them will make it unless they have a clear business drive and a use case and a business case to support it. This specific technology for this case, versus, of course, there's other ones that's also emerging, but does it drive a business value? Do I make it faster?
So from a very practical point of view, where we are now as ING, we have reached out to a number of the other leading trade finance banks, and more than one has indicated an interest. And again, I think one of the fundamental principles should be that you work together as banks. Secondly, we have reached out to some of our clients, and 2 of the larger trading houses have indicated support and have indicated a willingness to invest, to take risks. Over time, you are in this industry and you want to participate, and the leading banks and leading traders and the leading suppliers all use it, then you will use it yourself as well. And the reality as well will be that the current, let's say, ecosystem that has worked for a long time very well will continue to exist for probably at least another decade alongside, let's say, the new technology.
There will be disintermediation and there will be intermediation, and the banks are going to play a very vital role. And if you just look at the letter of credit, like there was just described, the banks perform 2 roles. Payment guarantee for somebody you don't trust their credit worthiness, and two, a referee of objective deciding whether or not the documents were presented and delivered.
What are the key roles that I see as a bank? It's a promise to pay something on behalf of another party. I think the basic role of a bank, in my view, the basic function of a bank should not change, but it's clear that this will be around the areas of transparency, speed, traceability, and ultimately also cost. The cynical way would be to say, if you have 30 people in your LC department, you can go down to 15. The positive way would be you can continue to grow your franchise, because this will not be a big bang, and with we have more than 40 in ING, our capacity to handle transactions will massively increase over the next decade, and that's actually the way I want to look at it. I believe trade will grow over time. We will see more transactions. We can probably do more. We can do more complicated transactions, and we can do it more efficiently.
The banks have a lot to gain from this. They're going to co-design their future. We're taking their ideas and implementing them. And there's a lot of great ones. I mean, you've just seen one from ING is very promising. But other ideas are also coming at us, and we're helping them co-design their future. But also, I mentioned the new business sources. You know, most of trade finance, 70% is open account, unbanked. Just imagine banks through these new virtual channels I also mentioned between buyer and seller that could open up opportunities for banks to attack the open account market. You can avoid more losses, and the data quality should hopefully lead incrementally to managing some fraud.
Quite clearly we can talk about the business cases. We can take out people moving paper from A to B. The fixed cost aspect is quite obvious. The efficiency in terms of turning working capital is quite obvious. I think the interesting thing is actually really what Stephen was alluding to, which is we probably don't know really how we can use this technology yet. But until you get that base platform established, until you start working with it, until you start using it, until participants start thinking about it, then we are still going to be very much at stage one. But if you don't do stage one, you're not going to get to stage two.